Okay, welcome everybody to this evening's ACY Securities webinar. My name is Duncan Cooper. Tonight's webinar is Forex Trading Live Market Analysis, which we'll get into in a moment. Coming up tomorrow evening, 8 p.m. Sydney time, I'll be going through how to trade the head and shoulders pattern. So if you want to join me for that, then just register your interest at our webinar page. Okay, before we get into tonight's webinar, if everybody could read through the disclaimer, and for those in the webinar, you can talk to me via the chat box or the Q&A box. For those on our YouTube live stream, I can't see the chat, but you're more than welcome to watch there, or I'll give you the link. You can join us in the webinar and talk to me there, but I can't see the chat on YouTube. And Sam, you're asking me a theory question. Do gaps fill previous imbalances? Well, gaps often get filled and imbalances often get filled. So you're saying if it gaps down and fills an imbalance? Well, yeah, that can happen. So a price could gap down and fill an imbalance. So let's say we of course know that we had gaps at the start of the week down on currencies to the US dollar. They could gap down and fill an imbalance and then come back up to fill the gap and then fill any imbalances above the gap. So yes. And a gap in itself kind of creates an imbalance. So then that's why price goes back and fills the gap. So hopefully that made sense, what I just said. But I'm assuming you're saying we've gapped down to fill an imbalance. So first of all, I was thinking that maybe you're thinking we've gapped down and then we come back up to fill an imbalance. But you're saying we're gapping down to fill an imbalance that was there quite a while ago. If you want to give me a pair example, I can go to the chart and have a look at it a little bit later. All right. Now, if you don't know me, then my name is Duncan Cooper. I'm the Senior Market Strategist and Trading Mentor here at ACY Securities. I've been trading the Forex market now for more than 20 years, mentoring for more than 10. If you want to contact me about the webinars, my email's there, duncan.cooper@acy.com. And you can connect with me through the week at the website, acy.com. Go to the Market News tab, at ACY Securities Australia on YouTube. And if you want to connect with me personally, my Linktree page is there. We'll be able to connect with me there. If you want to get access to the charts I'm using in MT4, just contact Nathan.bray. For those in the webinar, I'll put his details in the chat. And let's get into what's happening. So, of course, the news is very dominant at the moment. We'll just go and look at the news items coming out. But what I'm saying news is the whole Trump agenda at the moment, and his tariffs comes out and says he's going to have these tariffs. Now he's potentially pausing them for 30 days. Makes life very difficult when the market's reacting to what he's saying. But that's what it is. All right, so I'm at forexfactory.com here. I'm just going to go through the red items coming up for the week. They're the impacting ones. Time shown on my time, Queensland time. So moving into Wednesday, 1 in the morning for the US, we've got job openings here. 7:45 a.m. Employment change and employment rate for New Zealand. 11:15 p.m. in the evening, US ADP non-farm employment change coming out. 1 in the morning on Thursday, ISM service PMI data for the US. Later in the day for the UK, 10 p.m. We have the BOE monetary policy report, policy summary, bank rate votes, official bank rate, expecting a 25 basis point cut there. I would say the market's factored that in already. 11:30 p.m. US unemployment claims. Canadian into Friday, 11:30 p.m. Canadian employment change and employment rate, and then of course the US average hourly earnings, non-farm employment change and employment rate. So that's the biggest one for the week when we talk about the US. But all these red calendar events, particularly from the US, can definitely move the market this week. And there's, of course, any commentary from Trump would also move the market, which is making life a little bit difficult at the moment. But hopefully after a while, once we've got past all these early phases of changes. Things can settle down a little bit. All right, so make a note of the red items coming out, forexfactory.com. Pay particular attention, obviously, to Friday evening. We've got the job figures. That figures there, of course, are going to be translated into what the Federal Reserve may want to be doing at their next meeting. So into the charts now. This is my weekly chart of the dollar index first up. And we gapped up. US dollar gapped up. Pairs to US dollar gapped down on Monday following the tariff announcements over the weekend. And we gapped up to some form of weekly resistance up here where we turned around at previously. And we've sold off, we've gapped up, and we sold down. And we're starting to sell down today. And notably, there is some form of head and shoulder pattern here. I'm going to go through those tomorrow. But in some form here, 79% rally, we drop, rally, gap up. There's the left shoulder, head, right shoulder. Are we coming down like so? So we held up resistance, we false broke, we came back up to it, 79% retracement, and are we now topping out? If that's going to be moving down, pairs to the US dollar are going to be moving up. All right, so there's a question there, structurally, do we have a head and shoulder pattern forming, which would be a bias to the downside. S&P 500. It's not great at the moment. You can see, generally speaking, here on my daily chart, it's becoming a little rangy. Trend is holding the range. But I would, if I wanted to trade this at the moment as an instrument, I would look for the low area. We got weekly support here, which I've been discussing, 58.81. Down in this area is where support, and we've been fraction short twice. So that's clearly where the buyers are. So that's clearly the area where you want to look to try to engage to the upside at the moment. I think the trend is holding. Of course, price may not want to get down there anymore, and then you have to engage higher up. That's why I think at the moment with the indices, you have to pick your battles and look to buy at the low levels of where support should be. All right, other than that, I would leave it alone. All right, let's get into euro dollar now. Of course, we've had a gap down to my day chart, and I can see now that I've painted a head and shoulder pattern on the dollar index. There's an inverse one on the day chart here of the euro dollar. So I want to go to the weekly chart, and this overall movement down here, when we put this low in here, came down to a weekly area of support over here, which is holding about the 102 level and the 62% level from low to high. So buyers are being attracted there. Of course, it was negative. This is still in a weekly downtrend, theoretically, in lower tops and lower bottoms, but this is quite low down. It's at a technical buy level for those that want to buy. And of course, gapping down. So I don't know what the imbalance was that you were thinking about, but there was a little one in here. And that's clearly gotten filled. And what I did notice here on the euro was 79% down here. And we do have potential of a head and shoulder, inverse head and shoulder pattern here. So getting in on the reversal back up yesterday would have been ideal if you started to maybe think this pattern was going to form. Right now, one of the primary levels to watch is now this low over here, 103.34. So this weekly low here, can we start to hold back above there? So this is the 4-hour chart. It's putting in a higher bottom now. Gap down, came up, so the pullback today, and now it's putting in a higher bottom. So I'm expecting this to come up. We may well finish, if we go back to the day chart a moment, it was quite a nasty candle yesterday, and we almost filled the gap. We haven't quite filled the gap yet, but I'm pretty sure we will. And the question will be now, do we trade up all week following a nasty start at the start of the week? Lots of pairs to the US dollar have put in a big reversal candle. Opposite to that, the dollar Canadian's put in a massive reversal candle up at significant resistance area as well. So just starting to form an uptrend here on the 4-hour chart with a higher bottom. Getting in really earlier today, it wanting to come back above 103 would have been a good area to start to look at around the central pivot point here, but we can't go back in time. But any I would say this week and today, any revisit of 103 finding support would be a good area to watch for the buyers. Moving on, as we're starting to try and move above 103.34, is into tomorrow. I would think if we trade up today, all right, we might fold at 104 for the sellers today, but I think looking for the opportunity to buy a dip if we are totally reversing back up now after the gap down is look for a nice move up and any pullback to 103.34 to be support. All right. And as well last week's low, which is a little bit higher up about 103.49. So this area here to be support if we get a solid move up. At the moment where it is, it could actually fail and the sellers could be watching last week's low. This red line here is last week's low. That's last week's low, and then we gap down. We pretty much came up to it yesterday. So we don't know what's going to happen here. We're either going to move above and beyond and keep the upward momentum from yesterday's reversal, or we're going to fail here. So this could be the selling level for the sellers today. So that's at 103.49. Sellers could look for a reversal here today, but it's looking a little bullish in my mind. And I would expect we're going to be coming above last week's close here. And then can you see a bullish formation to maybe trade up? It's interesting that even with the gap down, we weren't able to take out the final low on the euro dollar, and we've been moving up. Euro yen. Yen pairs are a bit more tricky. Just want to go to the weekly chart, and this is where I've got my support and resistance in. You see the consolidatory nature of the weekly chart at the moment. Weekly trend is down and the day trend is down, so I would look for a high rally and see what happens if we come back up to this area here, 162.88. If we come up to that area and hold 162.88, lines up with the 79% level. So I'm just looking at where would I want to trade to the upside, and it's already done it today. To the upside, this weekly low here, I would look intraday at 159.69. If we were to revisit that area intraday, that's the buy area for support. And if we move up here this week, I would look at this area to be resistance to trade down. So those would be my two boundaries to look at on the euro yen. I would expect that maybe we're going to move up to the 79% level. So intraday, looking for opportunities to be a buyer on dips. Okay. Just looking at lower time frame at the moment. Bit of a higher bottom coming in here. And this last 4-hour candle was pretty much getting support at that level I just discussed, 159.69. So there's always the best time any revisit of this area here, 159.69. May not want to get back down there, but that would be the level I would watch now, 159.69. Because yesterday we got below it, it became resistance here. Twice. Then we've moved above. Then we've had this bounce below to come back above. So we'll look for that. That would be the area to watch for support. It kind of did it here, but didn't quite get down to the level. So it moved above, and then buyers came in here. So that would be the buy level to watch. All right, euro pound. It's definitely on the monthly scale, been up to approximate 62% rally. Are we forming a lower top to continue down? And week is coming back down support at the moment, so it's in a difficult area. Up here, trying to get short up in this area was the go on the euro pound. It's been showing a lot of support down at 82.76, which is a monthly level from over here, the monthly chart. You can see it's cascaded nicely down on the daily, gap down. It's back into this consolidation area. So whilst the highest time frame trend is down, lots of support down here. So if I had to trade this, I would look down at 82.76 for support and see what happens if price starts to hold down here. If price comes down here before filling this gap here, this is a level to watch on a lower time frame for support and turn back up. All right, pound dollar. Weekly look is in a downtrend. I've been saying since the start of the year that I felt the euro dollar and pound dollar had maybe put in a low. And we gap down below this low, but we moved back above yesterday. So that's kind of bullish in that we couldn't hold below there. And now we've already filled the gap. So the question will be this week, what happens if we retest 124.87 here? Is it going to once more hold there? Or are we moving back up the range? I've been feeling that this whole range here, high to low, looking at the day chart, that we're coming up within this range long term. We've filled this one imbalance. There's another imbalance up here to fill. There's more up here, very high up here. So if you could get long and hold, you never know, we may come up right up into this area at 133-ish up here. So massive reversal candle here on the weekly low over here, 122.99. So 123 is obviously strong support. For our charts turned up, it's put a higher bottom there on a retest intraday to last week's low. So last week's low now is becoming support. And getting along yesterday with the idea that gaps are going to get filled. Okay. When we get massive gap downs, and if you see some pairs hitting major levels of support or resistance, depending on whether it's a pair to the US dollar or US dollar Canadian is the opposite, it gapped up to resistance. If you see correlated pairs reversing, those gaps are going to get filled. So you should have been in the frame of mind yesterday after a massive gap down that potentially we're going to reverse back up. I got long the New Zealand dollar yesterday near support after the gap down. I'll talk about that shortly. Now, as I've been saying, after the gap down, we may trade all week now. The impetus for the gap down, tariffs, they've kind of been pulled back for 30 days now. So the impetus to gap down has been kind of now taken off the table. So then there is no reason to trade down, only trade back up. All right, intraday today, we've already pulled back below 2400. and we're already back above it. You can see this little area here. Intraday support was resistance there, became support just here and here. So it's looking like the buyers just underneath 124 at the moment. So any revisit to this area, this is the area you should be watching for support today, if it can pull back. Other than that, I need to see something that I like to look of to be able to buy a dip. I think general momentum is up from yesterday's gap down. It's being able to be on the charts at the right time to buy at a lower level. And this holding at the central pivot point today was the area to start to look to get long in this area here, but we've already been past that. So any revisit intraday to this area would be ideal to look at. Last week's low, 2381 to 12400. All right. If we were to trade down today, getting back down to 12300, that would be a great area to watch for support, lining up that weekly level of support. Okay, so just trying to plan my week. If these levels are retouched again, 12300 would be a great level to watch. This area today, intraday, would be another nice area to watch if we just come back into there and hold once more. But we may have missed the boat. Just want to go back to the daily. From a sell perspective, this area at 124.87. If you're more on the sell side, that's been holding for the last 2 weeks. So the market this week is either going to break above there or fail there once more. So that is a primary level to watch for, either failure or a break above. As I've been thinking that we're moving higher from the low that came in early January, just because we're very overextended to the downside. And this is a very long-term move down. Then we need a corrective rally for that move before we can have another long-term move down potentially. We have to correct that move, and we haven't done that yet. So in my mind, then my bias is to the upside at the moment, thinking that these imbalances will get filled. Pound yen weekly chart, again, very range bound. We've got relatively close to weekly support. I think we're probably moving up to weekly resistance here. I don't like where it is at the moment. It's just in the middle. It's just in the middle. It's in the middle of this area to, kind of this area. Yeah. Depending on what kind of price action I'm looking at, down here, 189.32 area is support. Resistance, if we're forming a new range within the range, resistance is really 194.1920. I would look at 192. We'll look at the boundaries of that range. And really, if you're on your game, too late now, but this range here was a 79% gap down. All right. Range bound market, gaps down to the 79% level. It traded down there 1, 2, 3 times. It held down there yesterday, and then of course has moved up. So that was the optimum area to trade. Right now we're in the middle, getting back into these highs up here, which if you're bullish, trading from the low area, close to support, you're wanting to take profits up here and then see what happens. But it's too late to get long. Really, it's getting a bit long in the tooth to get long. You're trading to resistance here, so it's not easy. 15-minute. It's clearly getting support today at 192. So any revisit to 192 in the central pivot point here today would be an option for the buyers. But I think you may have missed the most opportune time. Over the last 2 trading days, and then getting into the 3rd trading day, so Friday, late Monday into Tuesday, 193 is quite clear intraday sellers at the moment. This is where the sellers should be looking to sell if you have a sell bias. But I think we've bottomed out down here, so we're probably going to break above 193 at some point. I'd be much more inclined to try to look for an opportunity to get long on a setup close to 192 if we can get a dip. All right, Aussie yen. Not much different. It's still rather range bound. Structurally, it's maybe just a little bit cleaner. Top, bottom, lower top. That is a lower bottom, but now we might need a rally up because support's coming there. So from the buyer's perspective, any revisit of 95.51, and it's actually revisited today. So, as I say, any revisit, it's already revisited today. So as I'm talking, the best opportunities have already probably happened today already in terms of trading at specific levels. 95.51 retested today. It's probably now heading up back up towards 98.72 as a direction. And it's still holding then potentially at the moment this range. Pretty sure I said last week, watch this area for support, watch this area for resistance. All right. And after that false break, this is probably heading up to here. Does it come up to here? To trade back down again. Now, you've already missed the best opportunity today. That dip down here. And these tops here, these 2 4-hour tops, became your support today. So this last week's low that was acting as resistance yesterday for a while has become support today. That's where you should have been looking today. Already put in the higher bottom, so now life's a little bit difficult. But any revisit to last week's low, so last week's low, 95.59 down to 95.51 support. That's also last month's low and last week's low there, 95.59. One of my lessons I did last month was the monthly highs and lows. There's last month's low. We did trade below and did want to be resistance yesterday, but today it's flipped to be support. So last week's low, last month's low has been resistance in the first trading day of the week, but today it's become support. I discussed the importance of last week's lows, last month's lows, last month in the lesson. All right, so that's the primary level to watch. Whether or not we, the levels I'm pointing out today, we may revisit them through the week. They're already proving to be important. Was resistance here, and it's become support today. So any revisit of that level at the moment, you should expect it to be support. At the moment. Aussie. So I want to go to the weekly. Now, I was actually long in a gap below me yesterday. I didn't have a stop in place because I take my stops off over the weekend. So I actually got a gap below my 62 entry level. Took my stop off and was watching to see how price did its thing down at 61 yesterday before I was going to panic. And once we started to get support at 61, I thought, well, okay, we may be getting support there to move back up. And what has happened is we false broke this weekly low, this new weekly low here, but we've moved back above 61.70. So I was really in the frame of mind, as long as we can get back above 61.70, any pain that I was suffering, I may be just dealing with a gap down false break. So at the moment, I am just back into profit at the moment. And I'm thinking that maybe we're getting a false breakdown here at the 61.70 low. And certainly, if you haven't got long, trying to get long around 61.70 would be ideal, because we're false breaking the low. False breaking a major low could mean that we're going to completely false break it and move back up the range. You can see the massive rejection yesterday, reversal, and see how we came down to 61.70 again. Did the same thing when we false broke it here and came back above. We revisited it there. All right. So first time it false breaks, comes back up, revisits to move up. We false break it yesterday. We come back up. What do we do today? We come down to revisit 61.70. It's done the exact same thing that it did there. Price does this all the time. It will false break a major level. You think it's going lower, then it false breaks, comes back up, and then retests, holds to move back up the range. So again, the best level to trade was at 61.70 today, or close to, because that's what came straight down. At the same time, the Aussie yen came down to support, that came back down to support. Now you could be buying, if you thought, okay, I understand what you're saying, you could be buying now, stop just below 61.70. I mean, back to the weekly, we could be holding here to trade all the way back up to 69. There's 700 pips from where we're sitting right now. All right, so potentially a higher bottom may be forming here on that monthly level. And just a little bit of no man's land here at the moment. It's just asking the question, can we start to, stick above 62? Levels to watch, I think, are 61.70 for the buyers at the moment. And if we do get a nice move above 62 today, any revisit back down to 62 would then be potentially support. And, from a seller's perspective, I don't know if I want to be a seller at such low levels. It's when I'm seeing it false break major support, I don't know if I want to be a seller, because I'm selling at such low levels where we could have a major reversal. So I'm not that keen to be a seller. But if you want to be a seller, I would look higher up. I'll go to the weekly chart and I would look at this. We've already kind of been testing this area and traded through a little bit. I would look at this. If I wanted to be a seller, I would look up here at 63.48 and be patient. It's only 140 pips away. That would be my area to watch. An area that we haven't touched over the last couple of weeks. Other than that, I think there's a high chance that we could be dealing with a reversal back up the range. All right. New Zealand yen. So I've had it painted out like this for weeks. I've been saying that 86.71 support. Now, of course, we went through it yesterday on the gap, but then we came back above. We've retested it today, and I would the trade is to trade as close to 86.71 as you can to trade back up to 90.09 resistance. For our chart. It's been this 4-hour candle has been 1 or 2 pips short of that level. So I would watch 86.71 for support still. If it can revisit, great. If it can't, you may have missed the best opportunity. See, yesterday it was resistance here, exactly like the Aussie end. Resistance. We break above today. Try to get back below and the buyers come in just underneath. So 86.71 is your support level to watch down to last week's low. Last week's low is at 86.64. This is your buy area at the moment. All right, New Zealand dollar. Okay. Can you see why I brought down here yesterday? Major monthly level. There's another monthly level here. Major monthly level here. And as well, what I knew was, same on the euro dollar. And I'd have to go and check the other pairs just to be completely sure. But last month we're positive. And then we gapped down because of the tariffs. So that gap down is just, an anomaly, really. We gapped down. We couldn't actually quite trade down to support. I actually got long at 55.20 yesterday. All right, right down here with 100 pip stop. So I just front run 55.12 a little bit, just in case we couldn't quite get down there. And of course, we gapped down, went below the weekly low, couldn't quite get down to the monthly low, and we've massive reversal back up filling the gap yesterday. Today we haven't been able to get down as low to retest support. Now, if we hold here, then, and this is 2019, right? 2019 low, 22 low. We didn't trade below there. Is this the 25 low? We could just stay, we could come back up here and stay in consolidation through the year. Or are we triple bottoming here, getting ready long term? Is this long-term consolidation, this whole area, for a major move up? All right. We look at the monthly chart for the New Zealand dollar. I'm just going to squash it in. Get it to squash in. We're not at the lowest levels historically, because of course that's down here. But from a high historical price point, it's up here. We're kind of at the 62% retracement of the range. All right. Getting support at 62% level. Ish area here. If this was, let's say this was a daily chart rather than a monthly chart. I just want to go. This move down here. So let's just call this a daily chart. There was a little imbalance in here. This comes down to the imbalance, right? If there's any imbalance in here, this came down to fill it. Then it comes up. If there's any imbalance in here, this has come down to fill it. This is all holding from this. This is where this big impulsive move up here. This is where it started. That is where the support is being held at. Now I don't know if this is holding here for the major long term next 10 years, but it looks very supportive at the moment. And you can see the technical rationale. So, well, hopefully you can. Now, of course, at the moment, the weekly trend is down. That's a lower top. That's another lower bottom. But we're false breaking, getting support just ahead of major support. This isn't where I want to be selling. Taking profits for sure if I was short from higher up. But this isn't where major players are going to be looking to sell, because you're at a major support area. They're going to be looking to buy. So a massive rejection yesterday. And I would be looking, for, I don't know what price is going to do. Some news is coming out from New Zealand tomorrow, but whatever range we have here, look at that 79% level, overlaps perfectly with support at the weekly support at 55.41. If that could come down, that's last month's low, 79% level. That would be a perfect level to watch for a pullback to now, if it can come around. Now, whether or not it comes around, I don't know. You may have already missed the opportunity to trade down there. And when I traded yesterday at 55.20, we still have the gaps to fill. I was just using the concept that we're at major support. We have a massive gap down. That gap will probably get filled. So when I engage in the market, I have to decide that I'm going to take some form of risk to my account, calculate the risk at 100 pip stop, and I pull the trigger. And then I'm going to be right, I'm going to be wrong. At the moment, I've been up more than 100 pips. I'm actually risk-free now. Now, whether or not long-term, I'm going to see a very good long-term move from where I got in, I don't know. But this may well come back down to test support. All right, we'll just have to wait and see. But that would be the play to watch for now if it can come around. Dollar Canadian. Now, this is a major point. Squash the monthly chart in. Of the major range, historically, there's a 79% level here. There's a double top. 146.64. Hadn't actually looked at that 79% level and the double top until I was doing some work after the gap up yesterday. I thought, oh, that. So I was looking at that thinking, oh, that's a great level for a reversal. Now, if that was to reverse, pairs to the US dollar would do the opposite. And that has reversed. And of course, the pairs to US dollar have moved up. So you see, you have that correlation. And this is that major structural area on the chart historically. So this could be a triple top, much like the triple bottom on the New Zealand dollar. We'll have to wait and see how things play out. All right, so these monthly tops here, the highest one here is at 146.67. Yes, the trend is up, but we've obviously gapped up and reversed down from that area. So the question is now is, are we holding there for the long term? Weekly candles move down. Daily chart, massive rejection there. It's getting back today. It's starting to hold at this. This was December's high. Today, we closed below it. We come up to retest today, and then we're holding. So I would start to watch 144.67 for any further retests to hold the 4-hour chart, because that's a massive fire up there. Any revisit up here to 146.67 to 146.89, two monthly highs, that's the major sell level if we revisit. I think you may have missed the boat. We may not revisit there now, but if we were to revisit, you should be watching that level for a hard sell. After that big rundown, we're back into the previous support area at the moment. So whilst we are retesting 144.67 today and wanting to now hold below that high, it's a little bit difficult to sell because we're back down to the low levels once more, aren't we? But we, from a perfect world now, what I'd like to see is to daily a continued move to break this area first of all, and then a rally back close to this area, and then look in this area to get ready for a long-term short. So at the moment, it's looking like it's failed at the top. I don't like it where it is right now. I need it to show me that it wants to maybe put in a lower top, and then I can get ready to maybe sell it, maybe against 144.67, because this could come back up now to want to retest this area and put a lower top up there. It's very difficult when you've got consolidation, you break above. Well, we're back into the consolidation here to gather more buy orders to trade up. It's a little bit difficult. So I need a little bit more price action following that reversal. And maybe it's just a question of waiting to see what if the reversals continue, for example, on the euro dollar to the upside, Aussie dollar, New Zealand dollar start to follow up to the upside, then this should fall to the downside. But this is, of course, all tied in as well with the fact that Canada's getting tariffs. They've come out then and said, okay, well, if the US is going to have a tariff, we're going to have a tariff to counteract their tariff. So then you've got this massive jostling going on. So life becomes difficult. So you need to see a clean setup. A retest up here would be the perfect option, or being aggressive yesterday and selling up here. But this is worth taking a snapshot. I say this from time to time, and I said this at the start of the year, and this isn't last year's high or last year's low, but I said we will test last year's high or last year's low at some point in the year, potentially. And those are critical price points on the chart to expect price to go the opposite way. But when we're coming up to previous year's highs or lows, so previous year's highs or lows, that's 2019, 2015. These are yearly highs. When we're coming up to yearly highs, whether it's just last year's or previous years that we haven't tested for many years, price will probably do the opposite once we get there. It won't just break through and continue on forever. It'll probably hold and react and reverse. So this is a primary area for those that want to trade dollar Canadian to expect price to reverse. And, these opportune times, they only happen a few times in a year at these critical price points. So you have to be ready. And yesterday was time to be ready. All right, dollar franc retested, just the weekly charts retesting this top of the triangle. Come up, much like the dollar index. Is it putting in a lower top? It's come back up to where all the sellers are. Sellers are here. Sellers are here. There's the diagonal selling line where we've been holding at. All right. Now, personally, I would like price to maybe try to come back up to retest 91.58. That weekly high over here. But it's putting in a lower top. The opposite of the euro dollar, it's putting higher bottom. So $15. Going back to my 4-hour. Last week's high here. False break in last week's high. We gapped up. Come back below, come back above. That would be low to watch, 91.15 intraday today at the moment. Do we come up and retest that once more? So last week's high here. That's the area to try and trade down from at the moment, last week's high. Just there. So if that was to rally back up intraday now, draw a fib across there and keep dragging it down. 62 levels, very close to last week's high. All right. That would be the area to watch. Dollar yen. It's rather range bound. Didn't do much yesterday in the face of all the gapping down for the pairs to the US dollar. It didn't gap up really. Well, it didn't gap up at all. It did go down and go up in the day, finish negative for the day. And let's come back to my weekly chart. Been asking the question about, are we with this big sell-off, rally, possible failure here at the 79% level? I'll be watching this weekly high up here at the moment, 156.74. We did come below the area and test it just here and then trade it down. Then we've got a little bit consolidatory. So that would be the primary sell area at the moment to see if we're going to continue down from the 79% level. as well, watching the range of last week, which is here. The 79% level. Trade up there yesterday. Okay, another revisit to the 79% level would be ideal. So there's this area to watch, 155.70, or the weekly resistance area at 156.74. These would be two levels that I would watch this week. Big consolidator at the moment. We did get an interest rate rise, I believe, when we had the last bodge statement. Didn't massively sell off though. And whilst that would be theoretically a little bit more bullish yen, all this tussling going on at the moment with tariffs is creating a bit of a sideways market for bear. But true to the point, if these tariffs or anything else that comes out creates stock market volatility to the downside, so a risk-off environment, then I would start to look for sure for the possibility of the dollar yen to move down, because that would be a risk-off too. When we get risk-off in stock markets, the yen pairs tend to move down. So at the moment, this is rather consolidatory because maybe traders of the yen are a little bit uncertain. Most of the yen pairs are a little bit sideways at the moment. So I'll just look to the higher levels at the moment, the ones I'm just discussing. All right, let's finish on gold. Very bullish to a new high. So he's at theoretically US dollar week. If this is going high, should we expect US dollar to move down? So at the moment, yesterday we had a down day and up day, so we've kind of had a dip. So it's difficult to be a buyer at the all-time highs. 4-hour chart structure at the moment. All I would look for, and it doesn't mean to say price is going to offer it, is look at the range, look for a dip to the 62.79% area on the 4-hour chart. Price might not offer that, but buying so high up, to me, as a trader, is just fraught with danger because you're buying at the highest price. You want to be looking to buy a dip. All right, so wait to see if price can offer you a dip. All right, and I will just keep dragging that up if price keeps moving up and wait for a dip. Definitely, I don't think you want to be shorting it because we're making new all-time highs. So you just want to look for a logical dip with your strategy. All right, so the big question will be on Friday, what job figures data comes out. I think, generally speaking, it'll be interesting to see what other data figures come out this week. But over the last couple of weeks, generally speaking, the US data, if anything, has been fractionally weaker, for even the weaker side than the positive side. So if we have a few more weak numbers come out this week and the job figures aren't that great, that's only going to add to a weaker dollar in the short term. And that dollar index most certainly does look a little bit like the gap up. You know, is there a head and shoulder pattern forming here of some form at that 79% point of high to low? So keep watching this, because if we do keep moving, down, this is going to start to form a bearish structure for sure if it keeps moving down. And the market's going to see that, and they're going to be wanting to buy pairs to the US dollar. So keep watching the structure of this. If this keeps forming a bearish tendency, then follow suit when you're trading a pair. All right, so it's not easy at the moment with tariffs. It's not going to be easy as well this week because of job figures on Friday. But if you're in my world, Australia, it is a little bit difficult because as I'm going to bed, Trump's getting out of bed. And at some point while I'm asleep, he's talking about his tariffs. I know on Friday, my Friday night, Saturday morning, I woke up in the middle of Saturday morning, midnight, in the middle of the night, looked at the charts on my phone just to see what was going on. And I thought, oh, things are looking quite nice. But then when I woke up 3 hours later, he'd spoken about tariffs and price has gone down. So it is difficult when you're asleep. Can't stay awake 24 hours a day waiting to see what Trump says. Steve, thanks. Yeah, thanks for your comments there. So, primarily what I'm doing is getting my levels set. And when things get very volatile and extreme, like on the New Zealand dollar yesterday, I could have traded maybe the dollar Canadian down. I saw the New Zealand dollar was at a very major level, and it was time to engage. Of course, I don't know if I'm going to be right or wrong when I'm engaging, but I'm picking major levels to trade at the moment because we're close to major levels. And then, seeing how they work out. Like on the New Zealand dollar there, last year, I traded down from here. Actually, I'm just trading there. I didn't know it was going to hold, but of course it moved down. So what I'm just doing, I'm doing the inverse here. Not knowing if it's going to hold, but it's a major level that has a high chance of holding, and is it going to move back up? So at some point in the year, I may be looking to sell up here if we revisit. Okay. So way ahead of time, I know where the key levels are that the market can react at. And of course, there's only specific times of the year where we're going to be at those levels to trade at. All right, so tomorrow I'm going to be going through the head and shoulder pattern. Just as I'm starting to go through that as a pattern, of course, the dollar index I was discussing tonight is potentially showing one. So we'll have to wait and see where it runs out. So I'm going to go through the head and shoulder pattern tomorrow evening. If you want to join me, just register your interest at the webinar link at the top. And I look forward to see you then if you want to join me. Other than that, thanks everybody and have a great trading week.